Good evening, everyone. Or may I say good day for some of you that have joined us from another continent, if we have any. Okay, so you're welcome to ICAN online tutors. So if I can, you too, you can. I am Abdul Ganiyu Ogunowo. I shall be your facilitator for this course. I also have my co-facilitator, but unfortunately, he's not in class today. So anytime he joins us in class, I shall introduce him appropriately. Okay, so meaning that if I'm not taking you guys, probably due to some reason, okay, so you always have someone else to take you. Okay, so we are all professional colleagues in this field. Okay, so we are taking this course, Indirect Tax. So directly or indirectly, we should all find ourselves there. So whether you like, go by air, whether you like, go by road, the end result is that we should all meet at a particular point. And where is the place? Aso Rock. But me, I always choose to go by air because of this insecurity issue. So now, back to tasks. We have two types of tasks. We have the direct and the indirect. Direct and what? Direct and indirect. So for some of you that joined my principle of taxation yesterday, you can always relate whatever I'm saying in class with, some of the things we discussed yesterday. Okay, so it's quite interesting. And then for some of you that joined me in class in the morning, okay, so in the morning we discussed income tax and we took the introduction to the course. So here today too, so probably be looking at the introduction, the basis, the legal basis and nature of indirect tax. So how was indirect tax come about? Yesterday, while taking principle of taxation, we had discussion around is taxation, what's the justification, okay, for collecting tax from people? Okay, so is it justifiable for government to be collecting tax from people? And if yes, is tax or taxation a reliable source of revenue for government? So we had a debate on that, and people were saying yes. And for those that say no, they later said yes, but they want government to, make good use of those revenue from tax. Let's see what they are using our money for, and that's true. I support that. Okay, so we have two types of tax, okay, and that's direct and indirect. But this classification is by incidence. This classification is by what? Is by incidence. So remember yesterday we discussed some of the what? Some of the what was it called? Basic concept of taxation. So under the incidence rule, we said that we are looking at what? We are looking at who bears the burden, who bears the what? Who bears the burden of the tax. Okay, so for the direct tax, it is straightforward, right? Again, don't forget this classification is by incidence. So for the direct tax, we look at it from the angle of who bears the burden. Oh, the company. Okay. Oh, Abosede. Yes, Abosede is a working class. Okay, she works with so, company. Now, ABC company, let's say that's the name of the company she works with. Okay, pays her, salary at the end of each month. That's just an assumption. Okay, so the salary that she's being paid is what's subject to pay as you earn, pay tax, right? So meaning that at the end of each month, her salary suffers pay. Okay, so pay is being deducted from her salary. So meaning that what she receives at the end of the month is a net salary. Is a net salary. So it is easy for us to determine who bear the burden of paying Abosede directly. Though the company may be remitting to the, let's say for instance, she is Lagos LIRS. Okay. So, oh, sorry, she said she's in Nota. She resides in Ota, so then let us use LRS. So that's OGIRS, if I'm correct. Okay, so Ogun State Internal Revenue Service. So she pays her tax to the OGIRS people. So that one is straightforward. In another vein, Abosede has went to the supermarket to purchase some items, and these items are vatable goods. Okay, now let's even assume it is kilishi, she went to purchase. Because this kilishi has been processed, so it is vatable. It is what? It is vatable. But let's now start from the process. How does kilishi become what? Become kilishi. So it started from who? It started from the farmer, the cattle rearer. Okay. So the person that reared the cattle will not pay. Okay, will not pay VAT. The person that bought it from him too will not pay VAT. You understand? Because it is an agricultural produce. But at the point the person is now converting it to kilishi, processing it to kilishi, okay, so it becomes vatable when they are selling it out. Now, the person that produced this kilishi is the manufacturer. Is what? Is the manufacturer. So in this case now, this manufacturer does not have input VAT because the manufacturer purchased what? Purchased non-vatable item. But because the manufacturer has what? Has processed it. So when the manufacturer is now selling to ShopRite, okay, the manufacturer is for selling to what? Selling to ShopRite. So the manufacturer will charge what? We charge value added tax. The manufacturer will do what? The manufacturer will charge value added tax. Then ShopRite too, when they are selling to Abosede, okay, they charge what? VAT. But because Abosede is not even concerned about the VAT, all she's concerned about is what? Is the kilishi. At times, you may not even have that conscious of mind to check the receipt, the invoice you are issued, whether it is VAT inclusive or not. So she doesn't feel the impact of the VAT on her. Okay. So, and meanwhile, the manufacturer has remitted VAT, output VAT to the FIRS. ShopRite too, they have considered their input VAT and also what? And also remit the balance. They also remit output VAT. Okay, but Abosede, she doesn't have any obligation to the FIRS people because she doesn't have the obligation, the civic obligation to remit. Please take that. It's not to pay. So she has the civic obligation to pay, but she doesn't have the civic obligation to remit. So it is the ShopRite and the manufacturer that has the duty to remit to the FIRS people. So whether they charge Abosede, whether ShopRite charges Abosede VAT or not, ShopRite must remit. Whether the manufacturer charges ShopRite VAT or not, the manufacturer must remit VAT, in as much that the goods in question is vatable. Are we together? So now that's just to tell you the difference between a direct and indirect VAT, indirect tax, going by the perspective of incidence of tax or impact of tax, or who bears the burden of the tax. So now let's come back to the topic of today, the legal basis and nature of indirect tax. So what's the legal basis and nature of indirect tax? So like we do say that, okay, you need to tell me the basis, the reason why I should pay you this money. Okay, so because tomorrow now, someone should just come to your house and start asking you, Madam Abosede, and you are owing us 5,000 naira due. You ask them, which of the deals, community dues or which one? It's just dues and you need to pay us. I know you will take them to court. That dues for where? 5,000 naira dues. Hey, no. I need to know the basis. I'm not paying you a dime until you tell me the basis of what or why I should pay the 5,000. And if they cannot argue it, they don't have anything attached to it. It's not community dues, it's not security dues, it's nothing. I know you take them to court. Isn't it, Madam Abosedi? Or you just pay them? Hello?
No, I will not just pay them.
Because you want to know the basis. So the same thing goes for tax. There should be a legal basis. Because if there is no legal basis, there will be riots. There will be riots. And it happens sometimes in Abeokuta when tax was first introduced, before colonization. Okay. So there was riots. It's also happened in Aba when tax was first introduced. There was riots. Where? No. And there was this short story we discussed in class yesterday. So because of one chief, was like, let's start collecting money from people that are above age of 18 and the likes. Was it 18 or 16? Boys and girls, men, ladies, and the likes, including women. So that's how people went to the village and start announcing that, hey, women too will be paying tax, or these people too will be paying tax. So it results in riots. And tax for where? Waiting the tax. Okay. So except for the northern part of the country, because they are used to zakat. So that's according to the Muslim law. Okay, that they should, pay a certain percentage, like 2.5% of their savings after a year, okay, to the appropriate authority. So that's that. So in this class, we are looking at we take a brief definition of what indirect tax is. We look at the constitutional validity of indirect tax, features of indirect tax, powers to administer various taxes, VAT sharing formula. Then at the end, we summarize whatever we have discussed, then I give you guys assignments. Sorry, the class is about to start. So please, let us, relax our body. So pick up your writing materials. If you have any question, jot them down. So when I ask any question, you can always unmute your mic to ask, or probably raise your hand. Then I ask you, to speak. Okay, so at the end of this class, you should understand the following. You should be able to define and explain what indirect taxes is. In fact, by now, with my little explanation or little introduction, you should be able to explain what indirect taxes are and give examples. At least so far so good. We've mentioned VAT. That's a good example. Then you should be able to differentiate between direct and indirect taxes. We have differentiating. So it's like we've almost rounded up the class. Thank God. Then also you should understand the constitutional validity of value-added tax, consumption tax, and various levies. Understand the attributes of indirect tax, then also understand the powers of various levels of government. Okay, so that's all we are looking at. So also you must understand what the sharing formula is for that among the 3 tiers of government. So we have 3 tiers of governments: federal, state, and local government. Okay, so before we start, any question? Any questions so far? So good. Okay.
No question for now.
That's good. Okay. So if I may ask, what is indirect tax? What is indirect tax? Indirect tax.
Okay. An indirect tax is a tax that is being paid as soon as vatable goods and services is being purchased.
That's just one part. Indirect tax is not just VAT. We have other type of tax. We have customs and excise duties. We have stamp duties.
Okay. Let me say it this way: is a tax that is being paid is a tax that is being paid, is a tax that is being paid, is a tax that is being paid and the payer is not aware of the payment. Is the tax that is being paid unknowingly to the payer, or is a tax that is being shifted to final consumer? What is the game?
Okay. Okay, you tried. Another person, Ambrosia. Good, are you in class? Shika,
Yeah.
can you unmute yourself and speak? Oh yeah, let me hear your voice. Oh yeah, good. What do you understand by the word indirect tax?
Indirect taxes are taxes that are levied on consumers of goods and services. These are taxes that are paid, just like Madam had earlier said, by the consumer unknowingly. You know, it's a tax that is fixed in a while purchasing goods.
Okay. Okay, so what are the examples? So Ambrosia, can you tell us examples of indirect tax?
Indirect tax, we have customs, import duties. Yeah,
Valid tax,
value-added tax, yes.
Stamp duty is there as well.
Yes,
Okay, thank you. Okay, so now let's continue with our class. So you're about right. I like that. So please, when you are coming to my class, always be prepared. Okay, always be prepared. So your guide is your study test. So we are taking all topics in your study test in your syllabus. So you can always read your study test before coming to the class. So because we go to drag out for class, I ask questions, instead of ask me question. No, they say I did take class. Now only you come ask questions for my class. So if you ask me questions, instead I ask, I so like to give and take. No be so.
So
So now indirect tax is a tax that is paid, to the government by one entity in the supply chain. Okay, in the supply chain. For instance, let's say the manufacturer. Okay, so it started from the manufacturer, and a good example I made use is that of the Kilishi person. Okay, so the Kilishi person pays VAT, outputs VAT. Okay, being the VAT charge on sales to the FIRS. Okay, then the ShopRite person too, upon selling to Abosede, okay, also pay tax, output VAT to the FIRS after considering the input VAT. Okay, so we discuss more of this as we progress in this class. Okay, so now, so it is an indirect tax. It is a tax that is collected by one entity in the supply chain. So the supply chain is that, now let's take it from the farmer. Okay, the farmer sells the cow to the Kilishi manufacturer. Abi, to the manufacturer, then the manufacturer then sell to what? Sell to ShopRite. Okay, then the ShopRite sell to what? Sell to Abosede. Look at the chain of supply. Okay, so the farmer is in the, let's say, extraction industry. Okay, so then the manufacturer is in what is the conversion, industry. Then this ShopRite is in the service place. Okay, so look at the chain from the farmer, manufacturer to the retailer or the wholesaler. So it is a tax collected by one entity in the supply chain as a manufacturer or a retailer and paid to the government. So this tax is passed to the final consumer as part of the price of the goods or service. So when Abosede was getting the kilishi for, let's say, 1,000 naira, the price, there will be a price tag. So as she's speaking it, she already knows she's paying 1,000 naira. And there won't be any narration, any comments. that and this 1,000 naira is VAT inclusive. So she doesn't bother. In fact, most people are unaware of whether they are paying VAT or not, except if they have had it from someone or somewhere that and there's indirect, whether directly or indirectly you are paying tax. I know that's the language people used to use. Okay, so whether indirectly or directly you are paying tax. So the indirectly they are referring to is we are buying something now. So whatever we buy, some people are not even aware of items that are considered as vatable and non-vatable of zero-rated goods. So they even believe that everything they are buying, those that are buying fuel, they believe they are paying tax. What type are they paying on fuel? Fuel is not vatable. But if they are saying it now, the driver, they say, we to be paid tax now. In Yoruba, they say, I'm going to do this, we do that. So, which is not correct. Okay, so that's that. So that's just a brief introduction of what indirect tax is. So we have various types of tax. Another thing is that indirect tax is charged on what? It's charged on goods and services. So on goods, in line with the Value Tax Act, we have the vatable goods and we have the non-vatable goods. Okay, and we have some goods that they are zero-rated goods. So zero-rated goods means that, so we have vatable, we have non-vatable, and we have zero-rated goods. Okay, so vatable goods means those goods that are, that attract VAT, value tax, and they are at what? At 7.5%. Non-vatable goods means that those goods does not attract VAT at all. For instance, educational materials, it doesn't attract VAT. Okay, stationary materials doesn't attract VAT, except for some that are secondary. Okay, then baby items does not attract VAT. Okay, baby items does not attract VAT. Your rice, raw cassava, raw beans does not attract VAT. But immediately it enters the restaurant. Okay, so, and they have converted it, they have packaged everything, they have put everything, spice and the likes. Okay, then it becomes vatable. So if you go to Chicken Republic and you see VAT on your invoice, don't tell them that, is it not food I'm buying? Is it vatable? Yes, it is vatable. Okay, so it is vatable. So please take note of that. So also your drinks are vatable because everything has gone through conversion stage and the like. So it's no longer raw food. Okay, it's no longer raw food. It has become a processed food. Then for zero-rated goods, okay, so zero-rated goods includes lubricants and the likes. So they are not vatable, but then you still have to file your VAT return. So for the non-vatable goods, you don't need to file your VAT returns. Okay, so but for vatable items and zero-rated goods or services, okay, you are expected to file your VAT return. So for the zero-rated goods or services, you are not paying VAT, but you need to file your returns. You need to show us your revenue stream. Okay, so but for the vatable, for the non-vatable, you don't need to file your returns. Are we together? And formally, this indirect tax or value tax, is referred to as goods sales tax. Okay, goods and services tax. So in some country, what you see is GST. I think in Sierra Leone, it's still GST. So in some countries, it is GST. So GST is also value tax. So in Nigeria, too, it used to be GST. Okay, so but now it used to be value added tax. So the supplier, can pass the burden of the indirect tax to the final consumer, depending on the price elasticity of demand and supply for the product. So for rent now, the landlord owns the house, okay? But for every rent agreement, you must what? You must stamp it. There must be a stamp duty. And the stamp duty, okay? The stamp duty, let's say is at 6%. So it depends, it varies. Okay, so minimum of 0.75%. Okay, so depending on the tenor of the what, depending on the tenor of the rent, maybe it's 21 years, 6 years, and the likes. So that's that. So in that case, it is the tenant that pay the stamp duty. It is the tenant that pay what? Tenant that pays the stamp duties and not the landlord. Okay. So, but the landlord has the responsibility to ensure that the tenant pays. Okay. Though the financer says that don't give the money to your landlord, go and pay it yourself. Okay. Go and pay it yourself. But ordinarily, if you give it to your landlord, the landlord can pay on your behalf. But because they don't want a situation whereby the landlord will say, hey, we pocket the money, so you go and pay it yourself. But the condition they gave to the landlord was that, landlord, if your tenant fails to show you the evidence of stamp duty is paid, please don't allow them in. Okay, but that would be for the first time. So subsequent rent payments, there will be no stamp duty. Okay, but for the first time you are paying rent, okay, when there is new rent agreement or there is a modification to the existing rent agreement, then you pay stamp duty. Good, I could see you raising your hand. Do you have any question?
Yes, please.
Hello.
You
You are using two devices at a time. Can you
example of but didn't mention example of grow. Yeah.
I didn't mention example
Of zero rated items.
I mentioned lubricant now.
Lubricant.
It's like the network is poor.
Hello?
Hello.
Yes, my network keeps going up and in. Maybe I should just allow one.
Okay, I can hear you now.
Okay.
I can hear you now.
Yes, I'm here. Hello? For here. So it keeps logging me in and out. Okay, sorry, I didn't hear when you talked about the zero rated. Okay, now you've told me. You said lubricant. Okay.
So
Just
we have
lubricant.
what was it called? We have for services, any humanitarian donor funded projects. Humanitarian funded projects. Okay.
All right, thank you.
Also zero rated. So I've mentioned lubricants, Abby. Then raw materials for the production of pharmaceutical products. So all music, streaming, application, and the likes. So they are zero-rated services. So types of indirect tax. So we have custom duties, we have excise duty, valid tax, and then we also have stamp duties. So let's take them one after the other. First, for customs duty, custom duties are applied to imported and exported products. So these taxes are administered by the Nigerian Customs Service, NCS. So people are usually unaware of the taxes associated with imported and exported goods. And meanwhile, it is the consumer that bears the burden. But because we are not involved in export and import, our own is just to sit down, go to supermarket, get whatever we want to get and the like. So we are not disturbed with difficulties or challenges the importer or the exporter must have gone through before bringing those goods into the country. Okay, so we are unaware of the taxes associated with the imported and exported goods. Okay, so because we are not involved in the process, then we are the one that pays, the words, because these custom duties and excise duties, they will form part of the cost of the goods now, Abby, cost of the goods we purchased. So, and for that reason, if you are purchasing sardine, if you are getting sardine or fisher, Abby, so you are just getting it at the landing cost, at their own selling price, including their own profits. So they have added everything, they are all embedded. Okay, but we are not aware. So manufacturers and merchants pass along higher prices to consumers to offset the taxes they must pay when buying or selling raw materials or finished goods. So a recent one is that of the sugar tax that was introduced by Buhari administration on all carbonated goods. So if you are consuming carbonated goods, prices of drinks now has increased. One, because there was a new tax. Okay, there was a new tax introduced by the Buhari administration saying that there shall be payment of 10 naira. Was it 10 naira on every liter? Okay, on every 1 liter of the carbonated drinks. So the implication of that is for everything we consume, though it is the manufacturer that is paying the money, but then they are passing on the cost to who? We, the consumer. Then for excise duties or excise taxes, so it's also similar to custom duty, but then it is not paid on import and exports, but it is paid on manufacturing of goods. Okay, it is paid on what? It is paid on manufacturing of goods. So excise taxes are calculated on the cost of finished goods and paid for by the manufacturers of the goods. So a good example is that of Guinness. So if I pass through, what's the name of this road? ICAN. So as if you look at, if you observe Guinness World, you see that they paste and there was this certificate or their license, okay, for excise tax. Okay, so it means that they pay what? They pay excise tax on all the manufactured. Okay, so the Gouda, the Butter Guinness and the like, so they pay what? They pay excise tax apart from value tax. So for manufacturers, this tax is simply a cost of doing business. Okay, so they add it to the cost, no wahala. So it is the final consumer that bears the burden. So this helps them to offset the cost, they pass them to consumers on the finished goods. And this creates another layer of indirect taxes that the average consumer pays. So yesterday we discussed the multiple tax we have in Nigeria. So just look at it now. On one item, okay, on one item. So imagine now that these people are exporting their goods, or let's even take one of these imported goods. So in their country, if they have excise tax, they must have paid excise tax, and this must have been included in the cost of their products, which they sell to those that are bringing it to the country. At the point of bringing the goods to the country, the importers pay customs duty, okay, and also they pay VAT. Just imagine, they also pay VAT. So if there's any document that is a written document or that must be stamped under the Stamp Duty Act, they will pay stamp duty again, multiple tax. And all of this is being passed on to what? Passed on to the final consumer, to we, the final consumer of the product. Okay, so nothing concerns them. So the only thing they are affected with is the direct tax. So whether you are an educated person or not, whether you go school or you don't go school, you go pay indirect tax. So it does not, in fact, if you remember, we did one of the principle or canons of taxation is what's principle of equity. Everybody pays tax. So your value tax at 7.5%, whether you are rich or you are poor, you pay tax. In as much as you are consuming valuable goods or services, are we together? So then we move to value tax. Any person or individual, corporates or organizations that consume or buy any taxable product or service we have to pay value-added tax. So you cannot run away from it. So this, primarily is collected by who? By the seller through the supply chain, starting from the raw material guys up to the manufacturer who converts it to the finished goods, then from the manufacturer to the distributor, from the distributor to the wholesaler, from the wholesaler to the retailer, from the retailer to the final consumer. Okay, so that's how they pass on the cost up to the final consumer. So the seller then nets off the VAT and submits it to the Federal Inland Revenue Service through a designated bank. So the bank immediately issues a e-ticket as evidence. So when this is presented to the tax office, an e-receipt will be issued. So an e-receipt will be issued. But then you will not have your name there, Abosede. Your name will not be showing there that you have paid VAT. It is ShopRite's name that will show that ShopRite has paid VAT. But indirectly, who pays the VAT? Myself and Abosede and every other person in this class. Okay, so that's just it. So let's see what we have under stamp duties. Items of persons subject to stamp duty tax are written documents relating things between individuals or companies or partnerships. So a good example of this is the rent agreement I made use earlier. Okay, so when you have your rent agreement, it must be stamped. Okay, under the Stamp Duty Act. So any written document, in as much that it is a legal tender, or you want to use it as a legal tender, because when it is not stamped, it cannot be used as an evidence in the court. Okay, so every document that will be tendering in the court as an evidence must be duly stamped, otherwise it will not be accepted. Okay, so that's one. Number two, apart from rent agreements, we have other documents. Okay, so we have bill of lading, we have contract agreements. I name them. Another one, deed of partnership. Another one, do you know? Abosede, gold, Shika, Ambrosia. Another one. Actually, we have a lot, even more than 50. Okay, so don't worry. When we get to the topic stamp duties, you see everything we have. So companies or persons related with stamp duties must submit all the instruments. So we refer to them as instruments. Okay, so must submit the instruments to the stamp duties office for stamping, and the duty is paid directly to the FRS or the State Internal Revenue Service, depending on the jurisdiction or who are the parties that are involved. So if it is between individual and individual, it will go to the state. But if it is between individual and group of individuals, it will go to the FRS, especially where the relevant state tax authority cannot be determined. Then if it is between company and individual, so it is the company that is paying stamp duty, so the money will go to the FRS. Okay, so and the likes. So let's look at the constitutional validity of indirect tax. What are the legal backings? Okay, what are the legal backings? Because that's why we are here, the legal basis for indirect tax. So the constitutional validity of indirect tax, so we can trace them to the constitution and the constitution of the country. Okay, then also we can also trace them to what is it called? The various acts, okay, the various tax law and the like. So the Constitution of the Federal Republic of Nigeria, 1999 to be precise, the Constitution of the Federal Republic of Nigeria, 1999, provides, among other things, that the government of Nigeria shall provide economic and security welfare of its people. So section 14, subsection 2, subsection B particularly declares that the security and welfare of the people shall be the primary purpose of government, because we put them there. They are using our money. We contributed this money for them through tax, isn't it? My money, your money, everyone's money is there. Okay, so we pay them salary from our money. They run this government with our money. All the security agencies, they pay them with our money. Okay, so their primary responsibility is what? Is security and welfareism of the people, they are governing. So these are the main objective. So in addition to the cost of governance, which require funding. So and that was one of the justification, for saying that tax is one of the reliable source of revenue, to the government. So because for them to meet the cost of running the government, they need money. And I mentioned it in the class yesterday that government is a business. And for a business to survive, it needs money, isn't it? And Brother, can you still remember that?
Yes.
Okay, thank you. So one of the first, when you are asked, one of the first things to say is that what the legal basis for taxation or for indirect tax in Nigeria is the 1999 Constitution. Okay, so the revenue generated through tax would of course come in terms of what is indirect tax or income tax. Okay, so there's no government that can do without any of these two, or that can survive just with one form of the tax, maybe indirect tax or direct tax. So they need the two. Okay, they need the two. So the administration of these taxes, fees, levies, are product of legislative enactments, beginning from which all the tiers of government are empowered to make laws regarding what? Regarding various revenue items and or administer the laws enacted to regulate same. And that's why one of the former governor of Lagos, okay, so when the federal government stopped, giving them allocation, so they look internally, how can they survive these states, by coming up with different IGR, by strengthening their internal revenue board, okay, and with that, they survive, okay, by increasing their revenue generation from so amount to a particular, amount. And since then, this has been sustained, and Lagos State, out of the 36 states we have in the country, their internally generated revenue is like 50% or more of what the country is generating. Okay, so that's the power of taxation. And most of these, their income, comes from direct tax, because most states do not have more power or much power on indirect tax, because the major stream of revenue in indirect tax is value-added tax, and this value-added tax is paid to the FIRS, not any of the states' internal revenue service. And that's why Wike dragged the federal government to court, that is it the federal government that has the constitutional right to collect VAT, or the what, or the state? So everything is still dragging, because they know that it is the state that should have the constitutional right to be collecting the value-added tax. So maybe they are waiting to amend the tax law and the constitution. So taxes are the major sources of revenue for the different tiers of government, empowered to provide economic and social facilities for their people. So in Nigeria, unlike some other West African countries like Ghana, they practice a central government and central tax system. Okay, but in Nigeria, we practice a decentralized a decentralized tax or tax and system. That's why we have the FRS, then we still have the SIRS, the State Internal Revenue Service. Okay, so that's that's that. So the National Assembly is empowered by Section 4, subsection 3. The National Assembly is empowered by Section 4, subsection 3 of the Constitution of the Federal Republic of Nigeria, 1999, to make laws for the Federation in respect of matters included in the exclusive legislative list to the exclusion of the House of Assembly of the state. So it is only the National Assembly that can make laws for tax, that can make tax laws. So the relevant items in respect of which the National Assembly has exclusive power to make laws, are listed in the second schedule, part 1. And these include Section 16 for customs and excise duties, Section 25 for export duties, Section 58 for stamp duties, and Section 59 for taxation of incomes, profits, and capital gains. So this was one of the arguments put up, to argue that valid tax is not within the exclusive legislative list. So that is, it is the state that has the power to collect value-added tax. So let's see the outcome. So in furtherance of its power, the legislation enacted the following into law at various times. Okay, the legislation enacted the following into law at various times. 1, Personal Income Tax Act. 2, Companies Income Tax Act. 3, Stamp Duties Act. We have Value-Added Tax Act. We have the Petroleum Profits Tax Act. We have the Capital Gains Tax Act. We have the Custom Duties, and we have the Excise Duties. So someone may want to ask, where is withholding tax? So now let me ask you, is withholding tax a form of tax? Is withholding tax a form of tax?
Yes, withholding tax is a form of tax.
I would say yes, it is.
Okay.
It's an advanced tax, it's a form of tax.
Mrs. Dada Shika. Is withholding tax a form of tax? If yes, is it an indirect tax or a direct tax?
Withholding tax is deducted from, okay, maybe I'm paying you now. I'll deduct withholding tax.
So any payment you are paying me now, you must deduct withholding tax, have you?
No, depends on the service I'm rendering to you,
Okay.
and you're ready to me. Yeah.
No. Is it a direct tax or an indirect tax?
I'll say it's direct and indirect, but if you deduct withholding tax from me, I know that yes, you deducted withholding tax.
Okay, anyway.
Just that
So
you are
withholding tax
rendering
is
it
not
on my
not a
behalf.
form of tax. Okay, withholding tax is not a form of tax. And that's why you cannot see any legislative act for withholding
Okay.
tax. Rather, withholding tax is what should be taken as an advance payment. Okay, an advance payment of income tax, an advance payment of income tax. So going by the word income tax, we can say it is a direct tax. So income tax is a direct tax. So withholding tax is attributed or associated with a form of direct tax, but it itself is not a form of tax, but an advance payment of income tax. So it could be personal income tax and it could be company's income tax. Are we together? Is it clear now? Do you understand it now?
Yes.
Okay. So the National Assembly is also empowered to make laws in respect of matters on the current legislative, okay, on the concurrent legislative. Okay, so on the concurrent legislative lists are set out in the first column of part 2 of the second schedule to the Constitution. Okay, so we have capital gains, incomes, or profit of person other than companies. Okay, so that is at the state level. Okay, at the state level, they can also collect personal income tax. So it is not only the federal government, as we have it on the exclusive list. Okay, we also have personal income tax on the what? On the concurrent list. Okay, however, you cannot find companies income tax there, but you could see stamp duties. You could see capital gains tax. Okay, so personal income tax, stamp duties, or capital gains tax collected or are due from individuals, other than companies. Okay, then so capital gains tax is on properties. Okay, is on properties. Then personal income tax is on your income relating to individual. Then stamp duties on documents or transactions. Okay, so that's that. Please take note. Take note of that. And before I go, so where any or an act of the National Assembly, an enactment of the National Assembly delegates collection of tax or duty on capital gains, incomes, or profit, it shall regulate liability of persons to such tax in such manner as to ensure that same is not levied on the same person by more than one state. So you don't pay to the federal government, then you also pay to the state at the same time. Okay, so then the same thing applies to every other type of tax. Okay, so that it won't amount to double taxation. And so far, the local government does not have any powers of legislation in respect of taxes. Okay, so though they may collect if so empowered by law, but in Nigeria, as at present, though, the local government does not have any power to collect tax. And that was why I was telling you guys yesterday, while asking you if levy is the same thing as tax. Okay, so they are not a form of tax, because those ones are collected by who? By the local government people. And the local government does not have any power to collect tax. So please take note again. So that's that. So let's look at the features of indirect tax. Basically, indirect taxes have the following features. For the final consumer or individuals, indirect taxes are less popular. Do you all agree with this? Do you all agree that for the final consumer or individuals, indirect taxes are less popular?
I just see that most times you are not aware.
They are not aware.
You
So
may
it
not be
means
aware that we are paying.
that's why it is less popular.
Yeah.
When it is not Davido, it is not Burna Boy. So they will not know that they are paying direct tax. And another reason for this is because the awareness. Okay, so people are not aware, and the tax people are not creating this awareness for them. They don't go to the local area. So it is only people in the urban area that knows that, okay, most of the items they purchase, they pay VAT. But people in the rural area, they are not aware. Okay, so and again, if you are not a business entity, you are not required to make any compliances or file indirect taxes return. Okay, so using the case of Abosede, so she doesn't have any obligation to file returns, and I mentioned this earlier. Okay, but ShopRite, the manufacturer of the kilishi, has what? Has responsibility. If they don't file, they will pay penalty and interest. And if they drag things, I mean, if they don't comply, if they fail to comply at zero level, they may end up going to court and going to jail for not complying. Okay, so The cost of compliance is always lower than the cost of non-compliance. Also, they are not paid in lump sum. So there should be full stop here. So indirect tax are not paid in lump sum. You can see it goes through the chain of supply. That's a good example for VAT, from VAT. Okay, so from the raw material guys, okay, so we use the example of the farmer, okay, up to the manufacturer. And at times it does not even go directly to the manufacturer, do you believe? So let's use an example of, let's take yam now. Okay, let's take yam. Or let me even use vatable goods. Just that most of these raw materials, they are not vatable at source. So let's say from the farmer now, let's use yam. Okay, from the farmer, it goes towards to the trader. Abi? From the trader. Now let's say that what you want to do now is you're operating a restaurant and you do pounded yam. Okay, so you cook yam with egg sauce. So from the trader to the what? To the restaurant owner. The restaurant, Abi? So from the restaurant person, so because this is food, so the consumer consume directly, Abi? So this is one chain. So this guy does not pay, this guy do not pay, but this guy will pay output VAT, Abi? So VAT that is collected from the consumer. This is one chain. Another one is what? Is using, let's take for instance now. Can you mention any vatable goods that you know? Hello? Can you mention any vatable goods that you know?
Ice cream.
Ice cream. Okay, but
Meat.
once you look at the source, it's just
Meat
like
pie.
example of, they are all
Bread,
example.
bread,
Bread.
bread.
Bread is not vatable. Is bread vatable?
Is vatable.
Bread.
That one is the one you are
Meat
taking from the restaurant, from the supermarket. Don't mention
Okay.
food. Mention any other products that is vatable.
Milk.
Milk.
Yes.
Don't use milk.
Sorry?
Don't use milk. Okay, we can use milk, but I don't want you to use anything like food.
Okay. Maybe perfume.
Perfume is not vatable.
Perfume is not
Okay, what of
vatable.
handbags, luxurious bags?
Luxurious bags. Okay, so let's take bags. So we start from the, they use leather. So the extractor guys. So that raw material, let's say the raw material is not Abi. So it gets to the manufacturer. Okay. So let's say the manufacturer here is Gucci. Okay. So from Gucci now, who is the manufacturer? Let's assume Gucci is in Nigeria. Okay. So Gucci is in Nigeria, then they manufacture the parts. So now the consumer cannot go to Gucci directly. Okay. So they either go to one of their distributor or one of their wholesaler. So now let's say they go to, I'm not a fan of all these luxury bag. So just let's say ABC store. Okay, ABC store. So from ABC store, they ordered, this person ordered like 10 bags, or ABC store supply ShopRite. Or don't let us use ShopRite. Can you use any retail store? Any
Let's
retail
use
store
spa.
that
Let's use
Spa.
Shop, just right.
Just right. Okay, we can use just right. So now you and your husband now, because it's your birthday, and want to take you out a surprise. So yeah, let's go out, get to spa. So you are moving around and you get to the bag and he asks you to just pick anyone. So fortunately you pick Lucy. Okay. So now at the point of payment, you'll be paying VAT, but the VAT you are paying now, okay, it may not even be known to you. Looking at it from these third characteristics, that it is not paid in lump sum. So the FIRS people will not wait for this manufacturer from this wholesaler for spa. They will not wait for them until they sell the goods to Abosede, because at the time of production, at the point of production, Gucci does not know who the final consumer will be. In fact, they didn't even know most 90% or 95% of their final consumer. Okay, so they only know this person. Okay, they may not even know if Spa is buying it or not. Probably until if anyone of the owner of Gucci visits Spa. Okay, so this store too, at the point of selling to Spa, they pay VAT. The manufacturer pay VAT. Then the Spa too, at the point of selling to Abosede, they pay VAT. And Abosede, at the point of buying, she pays VAT. Do you now see? This VAT. But do you know that by the time it gets to Abosede, FIRS would have collected all the money, all the VAT, that Abosede will be paying. They would have collected them in piecemeal, small, starting from the manufacturer. So now let's just call me a figure. Just call a figure that Abosede is paying. Now let's say Abosede get the bag for 1 million naira. Abi?
Yes.
Or let me allow you call figure. Oh, yeah. I don't know how much they sell Gucci bag.
Okay, 1.2.
Okay, 1.2 million. So VAT is at what rate? 7.5%. Abi?
Yes.
So if she's paying VAT at 7.5%, how much would that be? 7.5% multiplied by 1.2 million. Egole.
Okay, I'm coming. 1, 2, 1, 2, 3. Minus 7.5 divided by 100. That is,
Sorry?
I'm coming. 1, 2, 3.
90,000.
Yes, it's 90,000.
90,000 naira.
Yes.
So yeah, now let's prove it that the FIRS at the point of Spa selling the goods to Abosede would have collected 90,000 naira. So, but instead of them waiting for Abosede to get the goods before Spa pay or ABC or the manufacturer pays the money, no, they collect it at stages. So now let's say Gucci, okay, sell the goods bag to ABC store at maybe 500,000. Abi? So yeah, do 7.5% of 500,000. How much is that? 7.5% of 500,000. How much is it? That's 7,500. Abi?
37,500. Yeah.
So VAT 37,500. Now let's say ABC store sell the bags back to Spa at let's say maybe 800 naira. And sorry, 800,000 naira. So yeah, do 7.5% of 800,000. How much is that?
60,000.
How much?
60,000.
3,000 naira. So you know that the manufacturer must have paid this 37,500 naira to what? To the FIRS people. Abi? So,
Yes.
and meanwhile, ABC pays this 37,500 to the manufacturer, who then remits to the FIRS. So at the point of selling, ABC is allowed to deduct this 37,500, isn't it? So let's bring the FIRS account here. This is the FIRS account. Abi? So they have collected 35,000 from the manufacturer. Abi? Now, SPA will not be paying them 50,000 naira. Sorry, ABC store rather will not be paying them 50,000 naira because ABC has paid 37,500 naira to the manufacturer before. So at the point of selling to SPA, ABC will first recover the 37,500 naira, then pay the balance to the FIRS. Exactly. So if we deduct 50,000 from 37,500, how much do we have?
If we deduct what?
37,500 from 50,000, how much do we have left? We should have 12,500, right? Is that correct?
Yes.
Yes, correct.
Okay. So now, SPA has sold the bag to Abosede at how much? 1.2 million naira, isn't it?
Yes.
At 1.2 million naira. And the VAT on the sale is 90,000 naira at 7.5%. But remember that SPA had paid 50,000 naira to ABC before, isn't it? So
Yes.
SPA is allowed, to deduct the 50,000 naira it's paid to ABC, then remit the balance to FIRS. So if SPA is deducting 50,000 naira from 90,000 naira collected from SED, so how much is SPA remitting to the FIRS?
40,000.
40,000 Abi? So
Yeah.
40,000 is going to FIRS.
Sorry,
Yeah.
I'm not too clear. Hello, I'm not so clear with this calculation. I'm not too clear with it.
You
I'm
have
not
a
too clear
question?
with it. First and foremost, you said Abosede purchased the Gucci bag for 1.2 million, which will give us 90,000 VAT on it. And another one is 500,000 naira, isn't it?
So who said the bag at 500,000?
Was it the manufacturer, Abi?
To
who? To the supermarket.
No, to ABC store.
Okay, ABC store.
Okay.
So no, let's come again. Abosede they purchased it at the rate of 1.2 million. The manufacturer sold it at the rate of 500,000 to the supermarket, Abi.
To ABC store.
To ABC. To be ABC store. ABC store, Abi. Then ABC. Then how do you come about the 800,000?
And now that's the price ABC sell to SPA. SPA is the supermarket now.
Okay, SPA. Okay. Before SPA now sold this 1.2. Okay. Now we got
before SPA
60,000.
selling the bag to Abosede, they must have gotten it from somewhere.
Okay, he got it from ABC.
Yes, now, and ABC also got it from where?
ABC got it from SPA. Okay.
No, from the manufacturer.
Okay, from the ABC. ABC
Yes,
got
now.
it from manufacturer.
And ABC was not the one that produced the bag. It's just an intermediary, the distributor for Gucci.
Okay. What we are doing here is for manufacturer to
ABC store.
ABC store. Okay, let
From
me
ABC
see.
to SPA. Then from SPA to Abosede.
SPA Abosede. Okay. Now the deduction.
Yes, so the first person that paid the VAT to the FIRS is the manufacturer.
That is
Because
abosede.
without the bag, okay, without ABC purchasing the bag from the manufacturer, where does SPA get it from? Where does abosede get it?
Okay.
So the manufacturer has
The
produced it
seller,
and is now selling to ABC.
Okay.
so the seller is
Go
only
ahead.
remitting the
Eh?
output back. I said, so the seller is remitting the output back minus the input back.
Exactly. So, and you know, at the beginning of my class, I said we have input VAT and we have output VAT. So the input VAT is VAT on purchases, while output VAT is VAT on sales. So taxpayers are allowed to net off their input VAT from the output VAT, then remit the balance to the FIRS. That's what we are doing. So the manufacturer charge VAT at 7,500, but the manufacturer does not incur any VAT input. That is because the raw material is a natural goods and not VAT. Okay, so but at the point of selling, the manufacturer charged 37,500 as VAT. So it's remitted to the FIRS. So we have 35,000 naira. So then ABC, when ABC is selling to SPA, ABC sell at 800,000 naira. Okay, because ABC must make profit too now. So, and the VAT on the sale is 50,000 naira. And meaning that our input VAT is 35,000 naira. And our output VAT is what? Is 50,000 naira. So if you are allowed to take your input VAT from your output VAT, how much do you have left? You have 15,000. So it is this 15,000 naira you are paying to the account. Sorry, 12,500 rather. That you are paying to the account of FIRS. And who is paying it? ABC store. Now, SPA has incurred input VAT of how much? 50,000 naira. So SPA is now selling the product to Abosede at 1.2 million naira, and the VAT is 90,000 naira. So meaning Abosede, SPA is collecting 90,000 naira as VAT from Abosede, but Abosede cannot go and, because Abosede cannot go and pay the money to the FIRS herself. Okay, so SPA is paying on our behalf. Then we allow for deduction. The VAT SPA has paid on getting the bag. You understand? So the difference between this 50,000 and 90,000 is what SPA is running. And how much is that? 40,000, isn't it? So that's what SPA is paying to the FIRS. So if you add everything together now, how much in total do we have in FIRS account? If you add 35,000 naira plus 12,500 and 40,000, how much is that? This one is 37,500, 35,000, sorry.
You say 12,500. I'm confused. So. Okay.
Yeah, so how much do we have in total?
90,000.
Eh?
90,000.
90,000.
Yeah, so this is 12,500 plus 40,000 plus 37,500.
37,500 plus 12,500 plus 40,000.
Yes, 90,000.
90,000. So that's why we said that they are not paid in lump sum. So we don't wait in SPA, sell the product to Abosede before FIRS get this 90,000. So pay your VAT.
The total amount that will be remitted to FIRS will now be how much? 7,500, ba?
90,000.
90,000.
You know, the manufacturer, Gucci, has paid at 7,500. ABC store is also paying 12,500. Then SPA is paying 40,000 naira. Do you get that?
I don't understand.
Don't worry. We will still do it in detail in subsequent class. Okay. So by then you should understand it. So I just use this to explain the reason why it is not paid in lump sum. So in fact, regular outflow takes place every time a consumer purchases a product or avails some service. And that's what we are demonstrated. You understand? That's what we are. Okay, so they are not paid directly. Another attribute of value-added tax is that they are not paid directly. They are not paid directly. Okay, so they are paid on purchases. They are paid on what? They are paid on purchases. And what we demonstrated earlier started from Gucci to what? To ABC store, then SPA to who? To the final consumer who is said. Exactly. Hello. About said is understood.
You have said when we get to the real aspect of it.
By the time you listen to the video lecture again, you should understand. Yeah.
Okay.
So what are the advantages of indirect tax? So like I said earlier, the poor can contribute to the state. So it's no longer a story of it's only the rich that pay tax. Okay. So whether you are rich or poor, you pay. Then it is convenient to pay. It has broad-based, scope. So indirect taxes can be spread over a wide range. You have seen a good illustration of it using Gucci, ABC store, SPA, and Abosede. Okay. So very heavy direct taxation at just one point may produce harmful effects on social network. But for indirect taxes, this can be spread widely. So you just imagine us asking Gucci to pay the 90,000 naira. It will be too heavy for Gucci, and it may not encourage Gucci to continue to be in business. Okay, but we are getting it small. We started from 37,500 Gucci. Then when it gets to who is it for ABC store? So we say, okay, ABC, you have paid 10,500 to Gucci before. Deduct it from the part you charge to your customer. So yeah, pay the difference, which is 12,500. Then SPA, don't worry, you have paid 50,000 to ABC store before. Okay, so deduct it from the VAT you are collecting from your customer, which is 50,000. The difference is 40,000. So in aggregate, what we have is 7,500 plus 12,000. That's 50,000. 40,000. That's 90,000. Are we together? So then it is easy to collect. Just imagine, it is Abosede that is going to pay the everything, but we have collected it small. So it is easy to collect. And Abosede is not even the one remitting. Okay, Abosede, don't worry. The problem is yours. Okay, let those that you purchase your things, let them be responsible for it. Okay, so we are not stressing Abosede, we are not stressing the. So unlike a direct tax. So it is easy to collect. Collection takes place automatically. Sold. Okay, so then it cannot be evaded. So there's no how you want to evade it. Because at the point of buying your goods or services, you hardly felt the effect of that. Okay. So when you are taking mortal Guinness now, when you are taking mortal Guinness, do you feel the impact of excise duty?
No.
Do you feel the impact of excise duty?
No.
No, you don't feel the impact because it was an indirect tax. So then do you also feel the impact of value-added tax on it? You
Not
don't
at
feel
all.
it. Not at all. So, because what you derive from the benefits, the enjoyment, coming from consumption of that water goods will not even make you remember that you have paid VAT or excise. So meanwhile, all these costs have been added to the selling price you are selling to you.
I think I will start being conscious of the fact that I'm paying VAT and excise duty on this item.
Sorry?
I said I'll start being conscious of paying VAT and excise duty on this item.
Okay. So meaning if you are taking 10 mortar Guinness in a day before, you
I'll
will visit
calculate.
it.
Honestly.
Okay, so anyway, I beg you, we need money. Please consume more. The more you consume, the more money you get in Nigeria. Please.
I'll be drinking more water.
Okay, now. And also it is elastic. So they are very elastic indeed. Impose on necessaries of life. Because just imagine all these things that they are imposed on. You cannot run away from them. Okay. So your husband wants to make you happy. Yeah, let's go for shopping. You want to make your children happy. Yeah, let's go for shopping. Okay. So you want to gift people, everything, just mention luxury items. So sorry, I've just checked. So perfume is part of luxury items. Okay.
You
So
clap for me, oh, clap for me.
it is valuable. Eh?
Clap for me.
Sorry?
I said clap for me.
Wow.
You know, I said perfume. You said it's not valuable.
Yes. So you said that's true. So it's part of luxury items because I just check and report that there are some perfume that in fact their cost don't want to mention. I'm not a perfume fan. So
There are many
there
of
are
them,
some
like
perfume
Red Jaw,
of
Red Jaw.
1.5 million naira.
No, Red Jaw is not up to that though.
So when someone is using wristwatch of 5 million naira, some people will say that one is even small. Okay. So those luxury items, I think we did it, was it this morning or yesterday? Was it yesterday's class? So when we spoke about luxury items, that I mentioned that during the Jonathan administration, he wanted to introduce luxury tax. I think it should be yesterday's class, right? So for people that purchase luxury cars, luxury yachts, the likes. Okay. So perfume is valuable. Okay. So also indirect tax is equitable. So when imposed on luxury or goods consumed by the rich, they are equitable. In such cases, only the well-to-do will pay the tax. Okay? So and that's equitable. So remember yesterday, we are under the principle of equity. We have vertical equity, Abby. Vertical equity and we have horizontal equity. Can you still remember? Rosie, are you still there?
Yeah.
We have vertical equity and we also have horizontal equity. So for the vertical equity, okay, so this is paid by what? As your income increases, you pay more tax. As your income increases, you pay more tax. But the horizontal equity, a good example is VAT at 5%. Okay, so everybody pays, irrespective of your income tax. Then indirect tax also helps to prevent harmful consumption. It helps to prevent harmful consumption. So imagine cigarettes. Okay, cigarettes. So government is trying to impose more tax, introduce more tax on what? On harmful consumption goods. Okay, so that people will run away from it. So imagine selling a stick of cigar for 2,000 naira. I know more than half of Nigerians will not be able to afford at that price, isn't it? And in one way or the other, governments would have curbed, all kind of illness or sickness that may arise or come from the consumption of cigarettes. So diabetes, anything, just mention all those sickness. Okay. So that's one way of using the consumption of such goods. So now everything that has advantage also has what? Also has
Disadvantage.
advantage. So
Disadvantage.
pardon me. Let me. This should be what's it called? Disadvantages, not advantages. Okay. So disadvantages of indirect tax. So indirect taxes also have some disadvantages, which include the following. It is regressive. What do we mean by regressive? So indirect taxes are not equitable to some people, and it is arguable. Okay. So a good example is that of luxury tax. Okay, luxury tax. So if successfully enacted, okay, so it is only the rich people that will be paying. So the poor are not paying. So for instance, salt tax in India fell more heavily on the poor than on the rich. So in India, there is salt tax. I don't pray we have that in Nigeria. Otherwise, some people may stop cooking, or if they are cooking, they will stop using salt to cook. And how can they find it tasty when they are not sick? It's only some people that I know that medical doctor may recommend that they stop taking salt. But it's not something they intentionally wish to do. So it's condition. So if Nigerians should introduce salt tax, will you still consume salt?
I
As a
will, but
reduced,
moderately.
reduced consumption. At a reduced
So
consumption.
you will reduce the consumption, Abby.
Yes.
So, but you know that it is even the poor that consume salt most.
Yes.
Yeah, so because you cook now, and the rich people, not all the time they eat all these.
Junk's food.
Mm-hmm.
And
So
they'll still pay
now
indirectly.
we have
Even if they are eating from a
Ma.
restaurant, they'll still pay. I said, even if they eat out, the rich people you said, they will still pay
Another thing is
indirectly.
that another thing is even if they are eating, if they take salt, do you believe that we are paying at the same rate? So if you want to cook egusi now, you want to cook egusi, 1 cup of egusi. Okay, so the same salt that you use is also the same measurement of salt that you use is what the rich people will use. So they can't say that because they are rich now, they want to cook 1 cup of egusi, they now take 5 teaspoons of salt and put. So it is the same quantity that you use to cook your own soup as a poor person, the same quantity they use to cook as what? As a rich person. Do you understand? Okay. So that's that. Then it is also uncertain. It is what? It is uncertain. So because at the point of producing the goods, so you look at the case of Gucci and Abosede. So at the point of producing the goods, Gucci does not know what the final value tax will be on the bag. Okay. So they only know what they are paying as VAT because they already determine what their selling price will be. But they don't know the amount or the price the ABC store will sell. They also did not know the amount or the price Spar will sell to Abosede. Okay, so that's why we can say that it is uncertain. Okay, so we cannot be sure of the revenue yield. In the case of goods with an elastic demand, the tax might not bring in much revenue. Okay, so then also it unduly increases prices of goods and services. Okay, so because SPA knows that they are paying value-added tax, look at the amount they sell to 1.2 million naira. Okay, so they sell to Abosede at 1.2 million naira, and they paid VAT at 90,000 naira. So then it is also not economical. It is not economical. So the cost of collection is quite heavy. Look at it. They collected from Gucci. They collected from ABC store. They collected from SPA. Like 3 stages. So that look at the cost of administration. It's usually high. So every source of production has to be guarded. Okay. So large administrative staff is required to administer such taxes. Then it is not civic consciousness. Okay. So because many times the taxpayer does not even know that they are paying tax. Okay, so they are not aware. So the tax is conceived in the price. And if some people are aware that they are paying VAT or they are paying tax, like was it Ambrosia that mentioned it the other time? And she's have a rethink of the mortgages to me, all these carbonated drinks, so that she take conscious of the parts and exercise she's paying. And that's
Exactly.
yeah. So it is harmful to industries. So imagine Guinness, they will pay custom duties on the materials they are importing. Abi? Then they will still pay excise duty on the drinks using. Abi? Then they will still pay value added tax. Just imagine. So it can be discouraging at times. Okay. So it can be discouraging at times. But the reason why they are still in business is because they know that they are not bearing the burden, the cost of all these tasks. So it is being passed on to the final consumer through the supply chain. So let's go to direct versus indirect taxes. Direct versus indirect taxes. So in providing answer to the question whether direct or indirect taxes are better, let me even ask you, which of the two is, with your little knowledge of what's direct and indirect taxes, which of the two do you think is better?
Indirect tax is better.
Why do you choose direct taxes?
Because you don't really see the impact of indirect tax.
Sorry?
You don't feel the impact of the consumer does not feel the impact of indirect tax.
But direct tax, because they feel the impact, so you felt that it is better than indirect tax, I mean?
Yes, indirect tax is better.
Yeah,
Okay.
indirect tax is better because it's a way of bringing both the rich and the poor to tax nets. And it cannot be, it's not easy to evade. You cannot escape from it. In as much as you are consuming any valuable goods and services, you must pay it. So that is why I feel it's better, because it's a way of bringing everybody into tax nets.
Okay. So good. What's your own contribution? Good. Are you there? Shika, what's your own contribution? Okay. So you guys have tried, but in practice, okay, in practice, you cannot say that one is better than the other. They are both important for a country. Okay, so it is safe to conclude that no country can do it one type only. So both types have to be mixed in a good system, okay, in a good tax system. Okay, so the two are very important. So because the rich can be taxed directly, okay, the best way to tax the rich is to tax them directly. So you tax them through income. And you can argue it that for direct tax, let's say personal income tax, payee now. Payee is mostly taxed, because people that are working, okay, so we can say that they are working in a structured environment, right? So in a structured environment. But the market people, okay, so it's not, you cannot say that you want to be collecting payee or income tax from them, because they are not structured, they are not well coordinated. Okay, they are not well coordinated. So the only way you can get tax from them is to maybe have a flat tax rate. So, and that's why what they do is they give them a flat rate. Okay, so usually they pay it maybe within the first 3 months of the year. So that's what most states does. So because we refer to them as informal sector. Informal what? Informal sector. So there's no way you want to, because most of them they don't even have bank account. And some that they have bank account for their company and they have bank account for their personal. So and most of these business money are routed through the personal account. Do you understand? So they are routed through the personal account. So you can't determine what is their revenue. So, but for the working class, okay, so whether you are working for those that are working under employment, under contract of employment, so it is easy to collect their tax. So the more income they earn, the more tax they pay. And if you are a business owner, big business owner, Dangote now cannot run away from tax. Okay? So, and your company too, you agree with me that you do pay tax. Otherwise, we are coming after you. We are coming for you. Okay, so the rich can be best taxed directly, but pocket of the poor have also to be tapped through indirect tax. So like I said, they argue. So indirect tax, brings everybody into the tax net. There's no how you want to do it. Like an example I use that in India there is short tax. So just tell me, is there any household in Nigeria that they didn't consume tax and they didn't consume salt?
Everybody in Nigeria consumes salt, but the reason why I
Except
feel the Indians have salt tax is maybe the usage, maybe they use this for the reason why there is salt tax in India is because of their usage. Maybe they use too much of salt, so the government is trying to reduce their consumption. But in Nigeria, everybody uses salt, and I think we use it moderately.
Of course, so that's correct. Okay, so I just use that as an example that it brings one way or the other, it brings everybody into task. Look at the excise duties on your malt now. Out of 100% of Nigerians, we will see 50% consuming malt, isn't it?
Yes.
One way or the vulcanizer, the mechanic, after working throughout the day, and because there's this saying that if you had malt with milk, that it is blood tonic.
Blood tonic recipe.
So that's their own thinking. So they will say that I don't have money for blood tonic, but they can buy malt and
milk.
Add it together and drink.
Which is even more expensive than the blood tonic.
You say what?
No, it's not.
In the long run. Because the blood tonic, you can take it has dosage now. You can take it for a week or two. But you can't just be drinking malt and milk every day.
Yes, that's true.
Instead of buying blood tonic now.
I know.
So we the Nigerians, the Nigerian, okay. So an average Nigerian is a native doctor in his own territory.
Yes. Malt now is about 300 naira. Malt now, presently, malt is 300 naira. And milk is 400 naira, which is 700. But you can get the blood tonic of 500 naira.
Yeah, it's you that know that one now. So that's
500 naira in this Nigeria. Blood tonic.
Yes, you can. There are some blood tonic capsules.
Yes, now counting.
Yes.
Okay, counting. Oh, yes. Okay.
They are also effective now. I don't know.
It's not different. Okay, like ferrous, Abby.
And Zeron, yes.
Ferrous, Abby.
So the relative importance of direct versus indirect taxes depends on a number of factors, such as the distribution of income, the nature of the economic system, okay, so and the stage of economic development. So the discussion of the relative merits and merits of advantages of that's just academic stuff. Okay, so it's just like an academic stuff. So when you are asked to come and do the case, so you argue in favor, you argue against. So when you're arguing in favor, you tell us the advantages. And when you're arguing against, sorry, when you're arguing for, you tell us the advantages, that is in support. But when you're arguing against, you tell us the disadvantages, so that people will not see it as something good. Everything is just academic. Okay, so in practice, so they are both important, and we are paying both now. So except for some of us that are self-employed, even if you are self-employed, you still pay income tax under the Provision of Personal Income Tax Act, except you are evading the tax law. And once we find out, we come after you, then you pay the appropriate tax plus penalty and interest. Okay, so that's that. So let's move to the power to administer various taxes. Power to administer various taxes. So, we have 3 tiers of government in Nigeria. Name them. Oh yeah, namely.
We have federal,
state, and local government.
local government. You have turned us to
We have the
be
federal government. We have the state, and we have the local government. So, at each tier of government, we have tax administrator. So for the federal government, who is the agency that administers tax on behalf of the federal government?
Federal Inland Revenue.
Federal Inland Revenue.
Federal Inland Revenue Service. Then for state income,
State Inland
Relevant
Revenue
Tax
Service.
Authority.
so we have State Internal Revenue Service. So some people call them State Board Internal Revenue. Okay, SBIR. So it's still the same. So in some literature, you may find it there as SBIR, State Board of Internal Revenue. So in Lagos State, we have the LIRS. In Delta State, we have the Delta State Board of Internal Revenue Service.
Ogun State, we have OGIRS.
We have Ogun State, we have
We have FCCIRS.
like there is no one to be left out. That's good. Then in Abuja, we have the FCT IRS. That's Federal Capital Territory. So in Calabar, what do we have?
Cross River Internal Revenue Service.
Thank you, Daddy. So that's good. So it is even easy for you to know the relevant type of operating in each state. The first thing you should find out is what is the state and capital. Okay, so you use the state and not the capital. Okay, so states. So Ogun State, Internal Revenue Service. Though there are some states that the way they take their own still include board, like Delta State Board of Internal Revenue Service. Okay, but in Lagos State, it is Lagos State Internal Revenue Service. But if you call it Lagos State Board of Internal Revenue Service, it is acceptable. You understand? So it is still acceptable. But what they are popularly known for is what we used to call them. Okay, so LIRS, everything. So now, in line with the schedule to the taxes and levies approved list for collection, remember we have the concurrent Abi, and you have the exclusive Abi. So that's from the 1999 Constitution. So in line with the schedule to the taxes and levies approved list of collection Act Amendment Order 2015, the following is the list of taxes collectible by different tiers of government. Now that we've understood what or who the tiers of government are, so let's look at what they collect. So taxes collected by the federal government include company income tax, withholding tax on companies and non-resident. Please don't forget that withholding tax is not a form of tax in itself. Rather, it's an advance payment of income tax, which could be personal income tax or company tax. So also it is the federal government that collects petroleum profit tax, education tax, value-added tax, capital gains tax, especially on corporate and non-resident individuals. On corporate and non-resident individuals. Then we have stamp duties on bodies corporates, stamp duties on body corporates, and incomplete the note. And what? And non-resident individuals, Then personal income tax in respect of members of the armed forces, members of the Nigerian police force, and staff of the Ministry of Foreign Affairs and non-resident individuals. Please note this. Okay, so these three are not collected by the state. Okay, they are collected by who? They are collected by the Federal Inland Revenue Service. Okay, on behalf of the federal government. Okay, personal income. So the salary of the Nigerian forces. Okay, so they also pay payee to the FIRS. So if you are in Lagos, if you do go to Oyi tax office, so you see all these personnel force. Okay, so all these armed forces and Nigerian police coming there to solve their personal income tax issue. So and you also see them in Abuja and the likes. So each state has the FIRS office, usually the headquarters in that state, okay, or the regional head in that state, where the foreign affairs and non-resident individuals, the Nigerian police and forces go to pay their personal income tax. So then we have National Information Technology Development. All of these tasks collected by the federal government. Then we move to the states, and we are starting from the Federal Capital Territory Service. So before now, it is the federal government that collects taxes from the residents of the Federal Capital Territory. But in 2015, there was a move, to make, to establish an internal revenue service for the Federal Capital Territory. So in 2017, about the commence operation. So personal income tax, pay as you earn in respect of all individuals residing in the Federal Capital Territory under employment in both the public and private sectors are paid to the FCTIRS. Then also direct assessment in respect of all self-employed individuals and enterprises resident in the Federal Capital Territory are also paid to the FCTIRS. Then the property tax, stamp duty, okay, so it's also paid to the FCTIRS. Withholding taxes, okay, so FCT property tax is the, what's it called? We have capital gains tax too. There's this, what's the name of this agency that collects some of these tax on behalf of the FCTIRS? Is it AMCOM or, I've forgotten. Ambrosia, can you remind me? There's this one agency like that collects this property tax on behalf of the FCTIRS.
I don't know, but I know AMCOM is asset management company, so I don't know if they collect.
No, it's not AMCOM. The name is like something. I've forgotten. So they have, it depends on the municipal. So they have like 3 or different agencies like that. So I want to remember, it depends on where you are staying. So I know there's this agency that collects for Azokoro, Say, and the likes, like that.
I know we have AMAC. That's
AMAC.
Okay.
Thank you. So AMAC and the likes. So they are the one that are responsible for property. So then we have stamp duties too. We have withholding tax, capital gains tax in respect of all the individual and enterprises shares. And others include all taxes and levies. The FCTIRS is also empowered to collect. You see, this is a typical example or a typical list of the taxes collected by every other state in Nigeria. Okay, so this property tax now in Lagos is what we call a land use charge. Abi, is what we call land use charge. Do we have that in Ogun State? Mr. Abasede?
We have stamp duty.
What of land use charge? We have land use charge.
No, I don't think so. We only collect stamp duty on property.
So that's tenement rate, right?
We only collect
tenement rate, Abi.
Tenement rate, yes.
In Calabar, do we have land use charge in Calabar, or what's the property tax in Calabar? Good.
It's tenement.
Rate.
Yes, sir.
That is being collected by local government.
The tenement rate is being collected, so we can't take tenement rates. So
by local government.
This property tax in Abuja is collected by one of the agencies, AMAC. So then land use charge in Lagos State is LI.
And
So,
stamp duty in Ogun.
but the one that is close to it is enactment rate charge. Okay, so then let's move to the state. So these are another, here now we did mention something like road tax, business premises registration, development levies. So FCTRS also collects development levy. Is it development levy they collect or business premise registration? I think it's business premises.
Business
Or
premises.
the development, or the development levy, I think it's AMAC.
Yes, it's AMAC. It's the local government that
Okay, it's
collects.
AMAC that is collecting it.
Yeah.
Okay, so that so we have pools betting, lotteries, gaming, and casino taxes, and the likes. Okay, so we have them in the notes. So the statement that taxes shall be collected through approved banks and through other electronic payments. So almost all states now, collect their tax through what? Through bank. Okay, or you can pay it online, like the Lagos State, pay online. Okay. So you can see the list for states. You can see it's a long one. We have naming of street registration, market taxes, animal trade tax, abattoirs, and the like. We have infrastructural maintenance charge or levy. So in Lagos, if you want to erect any infrastructure, you pay tax. You pay tax. So you can argue that it is a levy. Okay. So, but it is a tax. So you pay tax. So then we have right of occupancy fees on land owned by state. So then for the local government, we have shop and kiosk rates. So you can see now that for those of you that are in my class yesterday, when we are arguing that those rates or heavy. So you can now see that for local government, and what we have there is fees and rates, okay, and levy. So unlike the federal government and the state that we have tax, and tax. So at the local government level, what they collect is what shops and kiosks rate, tenement rate, liquor license fees, slaughter slab fees, marriage, birth, and death registration, street registration, right of occupancy, rural areas, excluding table by federal and state. Sorry, this is not another type of tax, which is part of this. Okay, so now we are almost rounding up the class. So this is the last part we are taking, and it is VAT sharing. VAT sharing. So when VAT was introduced in 1993, the intention of the federal government was to collect the tax, then deduct cost of collection of about 20%, and distribute the balance to the state. However, when the collection proved successful, then the federal government increased its share. The state government protested, especially the Lagos state government, which resulted in a review over the time, because Lagos state have been the front the frontliner state, okay, generating huge revenue from tax. And what government is getting, what the federal government is getting as valid tax from Lagos state, almost 50% of that, if not more than. Okay, so the formula for sharing VAT proceeds has changed over a period of time since the implementation, and it has undergone, the following series of changes. So the tiers of government. So we have the federal government, we have the state government, and we have the local government. So in 1995, the rate was 50%, 25%, and 25%. So total, we have 100%. So in 1996, there was a review. So the government, federal, there was arguments. The states were like, no, nah, and the money is coming from our, our jurisdiction. And so they reduced the federal government rate to 35%. So the states, being the highest contributor, gets 40%, and 25% goes to local. So again, the state are not satisfied. So this time now it is the local government, that calls for review. So the review now, the federal government maintained 35%. No, sorry, it's 30% rather. So reduced to 30%. The state still maintain 40%, and then 30% goes to the local government. Okay. Then in 1998, there was a review again. They have dragged the federal government again. Oh yeah, reduced to 25%. But this time now, the share goes to the state government. So the state government increased to 45%, and then the local governments remain at 30%. Okay, so everything now is still 100%. So currently, as we speak now, the current sharing ratio, okay, is what is 15% to the federal government, 15% to the federal government, then 50% to the state government, and then 35% to the local government. So this is the current sharing formula. So the state government, local government protested. Okay, so and this has led to the review over the time. Are we together? So that's all we have in today's class. And in summary, we have discussed the indirect tax being a levy or being a tax imposed on the consumption of goods and services, and then production. So we have to include production, especially if you want to include the definition of excise duties. So indirect taxes are levied on the production or consumption of goods and services, or on transactions, including imports and exports. An example of which include VAT, custom duties, stamp duties, excise duties, among others. Also, in this class, we discussed the types of indirect taxes, the constitutional validity of indirect tax, features of indirect tax, and then advantages as well as disadvantages of indirect tax. So we put up an argument, or let me say a short debate, as which of direct and indirect taxes is better. Some argue in favor, while some argue against. Okay, so also we discussed the power to administer because tax, and lastly, just discussed the VAT sharing formula. Okay, so yes, Chika, even though you have not been contributing to this class, okay, you will get the notes, don't worry. Okay, so thank you guys for being with me all through the class. I really enjoy your presence. So I have this assignment for you guys, which you must practice. So there is an holiday tomorrow. There is a holiday tomorrow. So please try to practice them before you meet up on Tuesday, so that you can have them submitted either tomorrow or before the next class. So if you also have friends writing sites and exam, please feel free to introduce them to IoT. Okay, that is ICAN online tutors. Okay, so we'll be very glad to receive them. Okay, again, so I have access to this recorded video. Please go to our channel on YouTube, search for Indirect Tax. I wish you best of luck in your coming exam as you prepare towards the indirect, and also do enjoy the rest of your day.
Thank you.
Thank you.
Hello, before you go, our lecturer.
Okay.
This question, can we have it on our WhatsApp? Because I don't know, it's not
Yes,
really
now
coming up here.
that's why I'm dropping the class notes, so you find it in the class.
Okay, drop it so that, and we submit through the WhatsApp, huh?
Yes.
Okay.
Thank you.
God bless you. We really enjoyed the class. It's
Thank you.
nice. Okay.
Thank you so much.
Thank you, sir.